So the work of the Chamber of Digital Commerce would not be possible without the support of its members and our many volunteers. One member in particular that has gone above and beyond the call of duty is that of our chairman, Matthew Roszak. Matthew has spent many long hours on the phone and in conference rooms helping us build the Chamber into what is now the world's largest trade association representing the blockchain industry. He's one of our founding members, and he continues to be one of our most active. Matt has impacted many lives throughout his blockchain journey and has a special talent to bring out the best skills in people. As the founding partner of Tally Capital, he has invested in over 40 companies in the blockchain industry, and he's made many more friends along the way. He serves on countless boards and advises the world's most innovative companies. Please help me welcome to the stage the chairman and co-founder of Bloq, Matthew Roszak.
Thank you, Perianne. My name is Matthew Ruzek. I've been a tech entrepreneur and investor my entire career. But I want to share something with you. As you invest and back companies or build companies, you always have this aspiration to change the world, right? You have that make a dent in the universe, the Steve Jobs-isms that we all kind of seek internally. To be honest with you, I've never had that investing and building companies. It was more like, best return, a best product. And for the first time in my life, my career, when I came across Bitcoin, blockchain, cryptocurrencies, I finally felt like there's some connective tissue to making that dent in the universe. And so that was really special for me to participate in this ecosystem. Other thing I want to say is storytelling in our space is super important. You have to hear about Bitcoin, blockchain, 10 different ways from 10 different people just to start to understand it. And I think gatherings like this really help people share stories, collaborate, and really get inspired in this space. And the space is really unique. I feel like this is a generational opportunity for entrepreneurs and investors. Now that translates into once in a lifetime. It's a really special area where we're talking about money factors, identity factors, and all these new layers of the internet, and it's really, really exciting. So there's this old adage where money is power, right? Typically for the few. With the advent of cryptocurrencies, money is turning into technology. And so that's translating this to now technology is power, and that's democratized for the many. And so a lot of power structures are changing and will evolve with crypto and blockchain coming into focus. And some of this we're seeing this narrative play out. Look at Mark Andreessen's famous quote, "Software's eating the world," right? And we're seeing that over the last decade or so, where the most valuable companies in the world are no longer an Exxon or a GE, they're software companies. And furthermore, these software companies and now these networks are becoming really, really powerful. And you look at these asset-less networks of an Uber has no cars, Facebook creates no content, Alibaba has no inventory, and the rest of it. And yet there's a new one, a new network, that's about $250 billion in value, a little less today. And it has no branches, has no CEO, has no customer service department, and something's happening here. But tech evolution has always been like kind of a scary thing. This is almost like my lifespan with tech, from PC to mobile to social. And if you recall your first interactions with tech, at any one of these junctures, it was a terrible experience. The first computer, getting online, the mobile flip phone, all brick around your shoulder. It were just terrible experiences. Social had MySpace, Friendster, whatever, and those were not really interesting experiences. And now Bitcoin and blockchain has similar dynamics where, is it that intuitive? What is it? How to use it? How come I can't buy jeans and coffee with it? Well, we're in the early days, and you can imagine some of these things. And at the same time when the internet was born, if we were all here, in this room and said, we developed this idea for Uber. Well, that would be an awesome idea. We'd be like high-fiving each other. But the problem is, all those interstitial layers of tech that made Uber weren't even invented. Like payment processing, GPS, iOS, all those things that made Uber at the time it launched took some time to develop. And we're going to see a lot of this stuff come together with blockchain and crypto and the rest of it as we move forward. And so Bitcoin being the greatest invention of our time, that's a bold statement for a tech that's been around for less than a decade on a 9-page white paper from some anonymous individual, a group of individuals named Satoshi Nakamoto. But truly, it is an invention. It is an innovation that's beyond. It created the first scarce digital asset. So something that can't be copied on a decentralized distributed ledger where people could transact peer-to-peer. That's a big deal. That's what got all of us in this room today. And so seeing this story unfold is really exciting. And but I am going to segue. Who is Satoshi Nakamoto? Like, there's still that dialogue of, who is this and who's behind it? And there was Dorian Nakamoto, which shoot and miss, to everybody from Nick Szabo, Gavin Andreessen, even my co-founder Jeff, and then some Australian dude, and another miss, truly a miss. And then you think about, okay, this amazing $250 billion store of value was invented by somebody we don't know. But think about this. So the picture on the bottom is Pythagoras. And go back to 5th grade geometry where we all learned the Pythagorean theorem, right? A squared plus B squared equals C squared. And with that, I could kind of bet my life that equation will work all the time, every time, right? And so we're kind of like thinking about how to trust and bet our lives essentially on math-based systems. And that's a big leap in terms of money and some of these other layers and the scaffolding that's getting built with blockchain and crypto networks. And then there's a real-life Satoshi in the form of Vitalik Buterin, who was deeply engaged in Bitcoin and wanted to create a smart contracting, a computing layer on top of Bitcoin. And it wasn't really easy to do. So he intellectually forked from Bitcoin and created Aetherium. And that was about 3 years ago on a white paper, raised $16 million at the time. And now it's a $70 billion network. And Aetherium did something pretty remarkable. Over the last couple of years, there's this Ethereum token format called ERC20, which created this gateway to do lots of crowdfunding, ICOs, token offerings. And with that, created this like Cambrian explosion of innovation in finance that I've never seen as a technologist in my life. It's really amazing. Like $6 billion has been raised on over 500 projects. And this is just getting started. And with that, it's inspiring lots of people to come in, investors, entrepreneurs, technologists from all sorts of disciplines. And it's really exciting ecosystem. And we're still yet in these very early days. We're in this, this is Coinmarketcap. So if you're well-rested and never seen this, then it must be nice. But a lot of people in this space, this is like their dashboard when they wake up. Like before you even brush your teeth, you kind of watch this every now and then. But here it's about a $400 billion ecosystem. So let's call it a $500 billion. A year ago today, it was about 20 billion. So about a 20x. It kind of got as high as 800 billion. And something's happening here, something unique. And there's a lot of speculation. And we've seen this speculation movie a lot in our lives, right? Look at early railroads, telephony, internet, and most certainly now with crypto and blockchain. But you need that. You need this effervescence to come in and innovate and speculate and risk stuff in order to come out the other end with these new amazing networks that will run money, identity, new layers of the internet. And so here, there's about 1,500 different projects listed on CoinMarketcap. Some are good, some are not so good, and it's early days. And these, the two flywheels happening here is one is speculation, and that's a $400 billion kind of flywheel that could be deemed effervescent and obviously sensitive to some of the other external factors of a hack or a regulatory pronouncement. And then you have the other flywheel, which is blockchains. The underlying blockchains underneath all these tokens have been generally ho-hum. Transaction value, utility, throughput, et cetera, has been not as amazing as probably we would want. But the font of innovation, and this is a movie, right? The font of innovation and the innovations and all the resources that are getting put into this, once this flywheel starts turning, this one will, 400 billion will kind of look silly. Because these are inextricably linked. And so we're still in the early days, kind of below $1 trillion. I think we're still in the Stone Ages. We've got a lot of work to do to build these ecosystems, and then we have a lot of work to do to bring adoption to this space. And so there's lots of tokenized layers. The tokenization of things is upon us. And this is like one good example where layers of web services are going to get tokenized and reimagined. And we're seeing that with lots of projects. So AWS, Amazon Web Services, if you draw a circle around Google, IBM, and Microsoft's public cloud, multiply that times 2, Amazon is still bigger than that. So they're massive. And they continue to get scale begets scale. And if you look at all the unused resources on, I don't know, even our laptops or server in your company or government or university, there's a lot of unused, unutilized assets and resources out there. And so reimagining different layers and the taxonomy of AWS into this new decentralized network is happening. And so you have Orchid for network, Golem for compute, storage. Here you have Gennaro, you have Filecoin, you have SIA, you have many others. Database, you have Bluzell. And they're developing a new AWS. And it'll be interesting to see how that plays out over time. But it's definitely something that is exercising the notion of a blockchain, right? You have all these disparate resources, and everybody likes to say blockchain, but they're really networks. And those networks are actually digitized cooperatives with a token that kind of creates a medium of exchange and a barometer of how that tokenized cooperative is behaving. And in many ways, like a really ridiculous example, but a good one is these cooperatives. Like if you grew up in the U.S., you had a True Value or an Ace Hardware on any particular corner. They were cooperatives. They bought hammers and nails as cheaply as Home Depot and Lowe's because they pooled resources and were able to do that. And so these digital cooperatives will behave in many of the same ways. So who here believes they own their own identity? Anybody? With Facebook and Google, it's kind of like getting weirder and weirder, right, over time. It's like the drumbeat keeps beating on, do I own my own identity? They keep selling my identity. They make all this money, and you look at the P&Ls of Facebook and Google and others, and you're like, wow, this is amazing, but we don't get like a check at the end of the month, right? It's kind of a bizarre dynamic. But what if you could own your own identity? It's one of the greatest use cases in blockchain. And imagine having a partitioned identity. So when you want to buy something, your money is green or your crypto is good. You go to a bar, you're over 21. You go to a hospital, apply for a job, apply for a mortgage. You have different partitions to different use cases of your identity that you own. And that's a big game changer because right now, we go into like Target and we buy, coconut water or whatever. We give a credit card and they ask for ID. I mean, that cashier knows where I live. I'm a Sagittarius. And like all the stuff that is like, why is that interaction so intimate these days? There's technology that'll solve that. And so this is Civic, and they're building this kernel on this identity layer and have a great start in that dynamic. And identity is really important for this space. We talk about money and payment layers, and we talk about identity layers. and not just for us, but also for companies and machines. And so when the Internet of Things starts to develop, you need payments, you need identity. Otherwise, they're just things, in many ways. So really important part of the scaffolding is getting built in this space. Securities. So you have a lot of people over the last year and a half, 2 years saying, I don't want my token to be a security. I want to stay away from that. That's like radioactive. And a utility token. Now there are a lot of platforms that are going headfirst and saying, let's tokenize cap tables. Let's provide startups with better access, liquidity, and better a format to raise money and do it compliantly. Do it within all the confines of any regulator on the planet. And there's a couple of platforms that are market leaders in this and have a great compass in front of them with T0 on an exchange, and then Polymath, which helps companies tokenize their cap tables and their platforms. So we'll see. I think the back half of this year we'll see a lot more inertia, energy, and people doing this. Blockchain Capital last year, actually at this conference last year, announced their token offering, which was done as a security. And so that was like the first. It was a $10 million financing, so not massive, but I think we'll see more and more of these test cases where people will do small bite-sized financings to exercise and show the world that this can be done. And so we're going to see a lot more of this. Okay, bear with me. What if Kim Kardashian had a coin and her own economy? I think it's kind of funny, but could happen, might happen. So think about every brand, every artist, every tribe, every zip code, neighborhood can tokenize their economies. Kind of an interesting concept. And we get these affinity points and tokens all day long, and you fly around on enough airplanes as most of us do, and we get all these mileage points, and the math you get between miles and this weird TV that they want to give you or whatever, it just doesn't give you the right incentive. But in these new networks, these affinity tokens turn into a currency and have the potential to turn into an economy. So let's take the Kim Kardashian example, right? So she issues 1 billion provably scarce tokens, right, in her economy. And we're the first Kim Kardashian fans, and so we all get some tokens. And this is 10 years ago, like when she was maybe a nobody 15 years ago or something. And so we were early adopters. And then, unlike today where L'Oreal goes to Kim Kardashian and says, hey, here's $10 million, your agent gets 20%, and that's how we roll and promote L'Oreal or something. In this case, L'Oreal will go and say, I'm going to buy $1 million worth of Kardashian coins, and then I'm going to go to your influencers in your network because I'll see how they behave and what they like and what they do. And I'm going to take your top 1,000 influencers and then give them more Kardashian points and Kardashian tokens in a way to incentivize them. And so, again, you think about what these tribes and artists and brands can do. They could actually create market and value and more camaraderie in their networks. And yeah, I guess Kim Kardashian will turn 90 years old and it'll be a bell curve. But what's the value of an ABBA coin or a Marilyn Monroe coin or an Elvis coin? There will be affinities and groups that will still have value over time. Space. There's no shortage of applications here. So the space chain is a real project. My co-founder at Bloq, Jeff Garzik, his original seed idea of Dunvegan Space was the kernel for Space Chain. And what is Space Chain? It is the first non-terrestrial software layer. And so we're building an Amazon Web Services, a blockchain in outer space. We launched a satellite 2 weeks ago, and that'll be one of a constellation of satellites. So you'll have this non-terrestrial software layer, and maybe one day it'll go to the moon and Mars and have a mesh network in outer space. Kind of really futuristic potential, but that's what you could build with some of this technology, and to to play on Space Chain, it has Space Cash, right? And that's how you access that network. And people want to think through, what is a token? What is a utility token? In many ways, we use a token with the U.S. Postal Service every day. They are a tokenized network. If we don't put a stamp on our letter, that machine doesn't work. They will not go from A to B. You could, duct tape a $100 bill on there. It still does not compute in that network. They just can't move it. So that's a tokenized network in order for that machine, the U.S. Postal Service, to work. And so a lot of these networks with utility tokens starts to come into better focus and better appreciation of how they work. But Space Chain is off to the races now. We're really excited about that project. Metronome. So this is another Bloq project. We developed this. Jeff Garzik was the creator of this new money layer, and it's a new novel cryptocurrency. And so it's the world's first cross-chain cryptocurrency, so it can move from one EVM, it's born on Ethereum, to another Aetherium virtual machine. So think of your crypto as a boxcar and the blockchains as rails, so you can move your boxcar to other rails. And so the notion there is self-governance. For the first time, you can decide where your cryptocurrency resides. And so a lot of that thinking in terms of self-governance permeated the whole project. Like the white paper wasn't a white paper; it was an owner's manual. This is your crypto. A much different kind of psychology on this. And then in the token sale, we're doing an auction. The proceeds don't go to some obscure foundation in Switzerland or don't go into somebody's pocket. They go into code. They go into a smart contract that does one thing, provides liquidity to the Metronome ecosystem. So we thought through a lot of these ways in which you build network effects and kindling for a new cryptocurrency. And we're really excited about Metronome. It's poised to launch in the next 30 days. And so a new asset class has been born underneath our feet. And yeah, these are carnival tickets, right? It's like that same U.S. Postal Service stamp. You can't go to a carnival and buy cotton candy or ride the Ferris wheel unless you have a ticket, a token. And so these tokenized networks are really interesting and really important because you look at the nature of an organization today. You have shareholders, you have employees, and you have customers. And those three constituents have three wildly different aspirations. But what if shareholder wants to make a lot of money, employee wants to make more money and be captivated and feel rewarded and feel like there's transparency in how they're tied to this. Customer wants the cheapest, best, fastest, what have you. And if you're able to assemble all those interests into one particular token and one kind of barometric unit that helps everybody align, it's a really powerful thing. So imagine a tokenized Uber. To ride in an Uber, I have to pay the Uber guy in Uber coins. The Uber guy uses that as payment. When Uber was first developed, it used seed capital and selling some Uber tokens. And so these platforms are going to be interesting to see how they play out. The other part of this asset class that's super interesting is that it's democratized. It's open. So a taxi driver in Ghana, a soccer mom in Brazil, all have access to this new asset class. And it's really, really exciting. And there's two worlds under construction here. You have the incumbents, and you could say financial services or technology or pick your favorite industry. But certainly in financial services, there's a massive race to jump into blockchain and figure out this technology. And a lot of these banks and financial services companies have three really massive advantages. They have brands, they have their own networks, and they have a regulatory edge. And that's a big deal in terms of them adopting new technology. And we've seen big regulated public companies adopt new tech with internet, intranet, extranet, with cloud, hybrid cloud, and certainly with blockchain doing private and permission versus kind of open. But over time, we've seen those play out in terms of the internet and the font of innovation there, playing out and jumping on the internet, cloud, putting their stuff in a secure cloud. And certainly we think the picture of financial services using open permissionless networks over time will happen. On the other side, you have the whippersnappers building these new layers of web services, identity, money, et cetera. And so you have these kind of two different worlds that are both innovating with this technology, and it will be really, really interesting to see how these two worlds connect and most certainly will collide. And we're in the early days to watch this play out. And there will be bumps in the road. There's not a straight line. Regulation, I could look back over the last couple of years and say the U.S. has been generally laissez-faire, been pro-innovation to let this ecosystem develop and see it thrive and see what it becomes. And we're going to see the brakes pumped every now and then. And I think there's an opportunity there. We heard this from the commissioner yesterday about an SRO to kind of help bridge that gap between the pace of innovation and the pace of regulation. Obviously, is always disjointed historically, but there's ways in which to compress that and compress, bad or eliminate bad regulation when you don't have an SRO or best practices or standards or good examples on how to behave in this space. Because the negative outcome to that story is all of us getting up and getting on a flight to Switzerland and Singapore, right? This regulatory arbitrage thing is at play. We've seen that in certain jurisdictions over the last couple of years, and if it's not thoughtful regulation, there will be innovation, jobs, investment will go elsewhere. And the dynamic at play here isn't a couple bucks or a couple jobs. These will be trillion-dollar networks with lots of jobs and resources. And some of these networks will get so big that they'll have greenfield, evergreen funding. So think of Aetherium when you bought it a nickel, and then you fast forward to where it is today, and then where it's going to be in 5 or 10 years. So that access to capital is almost like dulled completely. Adoption is always an interesting dynamic, where we talk about all this effervescence in the space. And when Bitcoin hit 10,000 in November, the dialogue was, do you have Bitcoin? Much like 25 years ago, do you have email? Everybody was talking about that over Thanksgiving and over the holidays, and that led to a big march to Coinbase and other platforms to at least start their journey in crypto. But the form factors there historically have not been great, right? It's like this is a blowfish actually, and so trying to manage a Bitcoin wallet, 2, 3, 4, 5 years ago was like filleting your own blowfish. If you hit the wrong gland, stuff is going to go wrong, and it's really this is money. You could lose a lot of money. But these form factors keep getting better. They're getting better for consumers. They're not as good for institutions because they're regulated and they need custodians and other regulatory clarity. So the adoption piece is evolving. And we talked about hype a little bit. I remember the internet days, people got really, really excited about putting women's shoes and pet food and office supplies online. That was like a big deal. That was the change the world idea back then. But here, we're putting together new layers of money, identity, web services. So I think the hype is kind of overhyped, and we're still in the early days. So I'll end how I started. The tokenization of things is upon us, and I think what's at stake here is this unprecedented levels of privacy, security, and access, and that translates into life, liberty, and pursuit of happiness. Those are the kind of things that we as a society want to strive for. And so this is much less about tech or money. This is a movement, and it's a movement about a better future. So thank you.